All right, welcome to Drill Down Earnings. We've got the latest look at results from Synopsys, important semiconductor software design, semiconductor design company. This is the business story behind One Stock on the Move. I'm Futurum's Chief Market Strategist, Cory Johnson. And Synopsys is a company that helps companies design chips and the things that chips use, and increasingly a growing market. But these results were confusing. These were second quarter results. Wall Street just likes a beat or a miss, and this was a beat, but Wall Street was confused. Wall Street forgot somehow that they sold off a division. And so when the numbers came out, the company had already said, hey, we're selling a division, so our numbers are going to be lower, so we're resetting our guidance. Well, they beat that guidance, but some people not paying attention didn't notice when the headlines crossed, stock sold off. But let's look what the business actually did. $1.455 billion in revenues, up 15% on a year-over-year basis. And again, higher at the high end of their guidance. Their earnings well ahead of their guidance. Diluted earnings per share of $3, up 26% on a year-over-year basis. And they raised their guidance, their full year guidance, and also giving guidance for the next quarter for the first time. So kind of good. We'll talk about what the stock did. I told you it was confused. When you look a little bit deeper, so they had in the quarter, they had two things. They got rid of a business and they acquired, or at least agreed to acquire, for $35 billion, a company called Ansys, which is going to add probably $2 billion a year plus in revenues. Ansys is doing $2.3 billion a year. The deal's not done, but today approved by shareholders. But when the results came out today, and you compared them to last year, and you didn't subtract everything that you were supposed to subtract because of the business they sold, it looked like it was lower numbers or lower growth. The spin-off obscured the steady growth this company's been putting up. And the operating margins also kind of steady, 22% operating margins. The business is simpler now. It's just design automation, which is helping their customers design semiconductors and the things around them, and design IP. Design IP is important. That's a smaller part of the business, only 27% of the business, but essentially they're selling chunks of stuff that they've already designed so their customers can kind of plug and play and say, hey, we don't have to start from scratch. This whole part of a system has been designed. Synopsys is selling us and letting us license that design and incorporate it in our next designs. And that's an important piece of growth, especially as they grow beyond the pure semiconductor segment. So when you look at the gradual diversification of the business, because they got rid of the software integrity business, represented in my chart in blue, it looked like there wasn't a lot of growth. But design automation was growing just fine, and their design IP business, a smaller part of their business, grew really great. But when the numbers came out, people were confused. The stock sold off a lot. Then it came back. It's down only about 1% in after-hours trading, and that's after being up 43% for the year. But the real promise here is they're not just going to be in semiconductor design and IP. They're going to go to a bigger market of embedded software, the bigger market of foundry, the big market of semiconductors they're already in, and electronic systems, a giant business that they think they've got a better chance of penetrating. And so I actually got to talk to the Synopsys CFO, Shelagh Glaser, right after these numbers came out. And she talked about those growing markets and what it could mean for Synopsys going forward.
It's really across every industry. And so what we're seeing is companies want to move even more quickly. And then we're seeing people expand their roadmap. So add more chips onto their roadmap so that they can service more of the industry. So the expectation that we have is that our full year revenue is going to grow in an accelerated pace based on that. And as you said, it's really all about the pace of the industry. And each of the companies that we service, as you mentioned, we service systems company, that's about 45% of our revenue, and their customers are demanding more and more for them. And so as those demands go up, they need more tools and capabilities from us.
So these numbers confuse the street. The promise of this company does not. And I have one number that's going to tell you a whole lot about what Synopsys is doing right now that shows them realizing that promise right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Synopsys reporting confusing second quarter results. We're going to make sense of them right now. Here's the essential summary, the drill down earnings takeaway. Company has $1.455 billion in revenues, beating their guidance, 15% year-over-year growth if you compare it to what they would have done last year without the business they sold. Wall Street got confused about that, maybe forgot about the sale. The estimates were a little off in some places, but I promised you the bite that really shows you what they're doing and what they're doing well. A number that tells us a whole lot. Their design IP business growing at 256% year over year. That's the plug and play software that they are selling. People are using those designs. It shows they're getting into businesses and that people are really valuing their software and their IP above all else. All right, thanks for listening to Drill Down Earnings. Check me out on X at Cory TV. Check out Futurum's YouTube page. Drill Down Earnings, part of 6.5 Media.